Hi, good morning, everyone. Thank you for joining our weekly research morning call. Today we got several counter update. We got Centurion, JP Morgan Chase, Wells Fargo's. For the sector outlook, we have Singapore Rate Monthly, and last but not least, our usual SG Weekly and a technical analysis. So just to flash a disclaimer, everything that we share will be purely educational purposes. I'll pass my time to my colleague Iben to start with Centurion.
Thanks, Helena. I'll present on Centurion's update. We published a report this morning. It's titled as a new episode. I'll explain in the next slide. Yep, next slide, please. Yeah. So Centurion announced its new PBSA brand, which is their purpose-built student accommodations brand, which is called Episode. They are building their first property in Macquarie Park, and this property has about 732 beds, which is about 82% of Australia's current PBSA capacity. And this project is expected to be completed by February 2026. We did a site visit to Macquarie Park, and as you can see in the photo in the top left corner, the structure is already built. So it will be a matter of months before they can obtain their TOP to move in, for students to move in. Yeah, so as you can see in the images, they target a slightly premium tier kind of student accommodations, and they target more international students. As you can see, the room interior and the reception area and swimming pool is not it's not that of a typical student accommodations. It's not the kind of amenities that you'll find in a typical student accommodation. Yeah, so they target sort of like the premium tier, and this property is conveniently situated within 5 minutes walk to Macquarie University and Macquarie Shopping Centre, as well as the train station, which takes about 20 minutes to the CBD itself. And we do expect this property to be the first off-campus PBSA facility for Macquarie University, because currently in the vicinity itself, only this property structure is being built up. And within on-campus student accommodations for Macquarie University, there isn't much student accommodations. So we do think that the demand supply dynamics is very healthy. Macquarie University has about 10,000 international students. So we do think that the demand will come mainly from there. Yeah, next slide, please. Yeah, so an extension to the update is that Centurion announced that it's spinning off their REIT. So they included more details in this announcement. The REIT itself will include 14 assets, 5 Singapore worker accommodations, and 8 UK and 1 Australia student accommodations. So after the previous property um, is obtains the TOP itself, the Centurion REIT will acquire the episode, will acquire the property itself after it's being listed. So in total, after everything is done, there will be 2 Australia student accommodations. And for the spin-off itself, Centurion, the parent group, will receive almost $1.2 billion as transaction proceeds, of which about $500 million is in cash and $700 million is in sponsor units. And after the spin-off itself, the parent group will own 45% interest in the REIT itself. And they announced that they will pay off about 5 to 10% dividend in specie following the next year's AGM itself. And we estimate this to be about 6% yield. We do think that there's upside for Centurion, and we maintain and accumulate, and we raised the target price to 1.88. Previously it was 1.45. And we derive this target price from the sum of the parts valuations, because we value the Centurion REIT portion based on the 45% stake. So total, if you translate it to 100%, that will be about $1.5 billion valuations. And we also value the parent group's fund management segment at 19 times management fees, because Centurion parent group will actually wholly own the manager and the REIT manager of the REIT itself. So they will collect fund manager fees. And last but not least, we also value the parent group's remaining assets at 19 times FY26 adjusted PE. As you can see in the chart below, we we view the peers for the new um Centurion Centurion parent group as uh real estate groups with REIT spin-offs. So for example, Capital Land, Frasers, and City Developments. As you can see, based on PE itself, for the both historical and forward PE itself, Centurion is trading below PE as compared to its peers. And that's how we derive the 19 times multiple, because as you can see, for the current PE valuation is about 19 times. And if you look at forward PE itself, Centurion, we value Centurion's remaining assets at a slight premium compared to about 16.6 average of its peers, because Centurion announced that it has a distribution policy to distribute 100% of their annual distribution income from the listing till 2027 itself. Yeah, so we do think that they will maintain a high dividend yield, and we also value it at a slight premium because of the dividend in specie that is being tagged to the parent itself. Yeah, so shareholders can expect this about 6% yield gain in terms of dividend in specie. Yeah, that's all from my end. I'll hand over the time now to Darren. Thanks.
Yeah, thanks, Ipan. Yeah, run through Singapore REIT monthly. So our title is for the upcoming result season. We're expecting tailwinds from low interest rates ahead. So previously already saw a couple of, or rather around half of the listed REITs already have year-on-year savings in interest costs. So going forward, we're expecting more, especially since the SORA is now so much lower than a few years ago. Yeah, so to begin with, we start off by showing the share price performance in June. So you see the 1 month performance, all of the REITs subsectors are up. But year to date, there are still some subsectors that are still down, like overseas retail and industrial. But the index itself has recovered to up year to date after the 4.1% recovery in June. Yeah. So the biggest news last week was the NTT REIT, the DC REIT listing. So I wrote about it, and I also had a flip on the ground last week. So basically, just some highlights is that it listed last week on Monday. So the share price it after the listing immediately it went up by about 3%, then closed down at IPO price at $1, and since then the price has really been quite lackluster. So it's around 95 cents. The last I saw closed on Friday. Yeah, so that's the latest for the share price movements. Next slide, please. Yeah, so moving on to the dividend yield spread. So after the 4.1% share price increase and the fact that the 10-year yield continues to decline, the yield spread has fallen just slightly month on month, but it's still almost at historical averages. So it's now at 3.7%. Going forward, we still expect the 10-year yield to decline further, and we expect the absolute number of absolute DPU amount to increase further. So as a result, the dividend yield will also increase, and that will increase this dividend yield spread both ways. So that will basically make REITs more attractive as compared to other yield plays. So this chart, if you didn't know, it's just the forward dividend yield minus the 10-year Singapore government savings bond yield, or you can take the bond yield as like a fixed deposit proxy, the risk-free rate proxy as well. Yeah. So in July, the 3-month SORA has really fallen to 2.03. So that's as of 4th July. The latest figure has fallen to below 2. So we're expecting we're expecting the REITs with Singapore exposure, especially those Singapore dollar loans and high proportion of loans on floating rates, they'll start to benefit from this low 3-month SORA. So we're expecting more and more REITs to benefit from low interest rates. Yeah, next slide, please. Yeah, so forward dividend yield, it just dipped slightly because of the share price performance, the 4.1% increase in June. And the price NAV still looks very attractive, 0.88 times. So that is even lower than COVID-19 lows. And usually at around this 0.8 levels, there will be a rebound as we see historically. Yeah, next slide, please. Yeah, so moving on to some of the subsectors data that we track monthly. So one of it is retail sales. Retail sales has been relatively flat The subsectors in retail, or rather the trade sectors, were mixed. So like departmental stores is down, supermarkets is up. Yeah, but generally what we see from landlords are that the potential to raise rents is still there, especially since there's limited incoming supply for retail space, and also occupancy costs as still at below pre-COVID levels, and for some REITs, others are around historical averages for occupancy costs, but there is still room for rental for different reversions, especially in the suburban space, where the focus is on essential spend and more resilient in an economic downturn. Yeah, so we favor suburban malls, suburban like FCT, for their stable income and potential for rent reversion. Yeah, next slide please. And for the hospitality subsector, we track this RevPAR and visitor arrivals. Visitor arrivals is down slightly in the month of June, but there are some events that are now the World Aquatics Championships. Now it's on right now in Singapore, so that will likely help to have a little bit of kicker in July's visitor arrivals, and RevPAR will also likely to perform quite well in July year on year. But overall, we're expecting the full year to have a low single-digit RevPAR growth and visitor arrivals to reach around 95% to 100% of pre-COVID levels. So that is almost a full recovery. But just to note that the RevPAR is already 25% above pre-COVID levels, and visitor arrivals for this particular month in June is 20% below pre-COVID levels. Yep. Next slide, please. Yeah, so this is our coverage list, and we will have more updates as the 2Q25 results come along, which starts this week. Yep, hand over the time now to Zane. Thanks.
Thanks, Darren. Good morning, everyone. So move on to the technicals. First slide on the S&P 500. Last week, it continued to move upwards, up close to 0.6%. So it's in terms of the price action, a bit more sideways now. So just a bit of a consolidation, but price is still finding support from the short-term 5 and 10-day moving averages, the blue and red lines you see in the chart. So overall, still very strong momentum. We are likely to see some kind of further consolidation, but and price to inch upwards slowly this week, with current resistance at 6,350 to 6,400 area, and support likely to be at 6,240 to 6,285 area. Next slide. Then next up, this is the chart of the Hang Seng Tech Index. So we think that the Hang Seng Tech Index has actually broken out as of last Friday, and is likely to play some catch up to the Hang Seng Index, which is at a 3-year highs. So looking in the terms of this chart, we can see that it broke out this wedge consolidation, this blue in blue, after it had been just trading sideways since mid of April this year. And some of the price action previously was that price held the 5,070 level, which was a previous resistance, and it turned into a support. And with the MACD currently flat around the zero line, we expect a breakout soon to actually see a increase in momentum. So we could see the index actually trade higher from here to actually retest the resistance at 6,195, which was a swing high from the start of March this year. Next slide. Yeah, so with that, we have a technical buy for the Lion OCBC HS Hang Seng Tech ETF HST at 88.7 cents, take profit level at 94.5 cents, as well as $1.03, stop loss at 83.5 cents. Last close of Friday was 88.7 cents. Now, so similar chart to the Hang Seng Tech Index, we see a breakout of this wedge consolidation where price is likely to move higher towards these two take profit levels, which were prior resistances. Yeah, next slide. Yeah, so next one, I will just cover a summary of our technical calls initiated last week. So first up for Tuan Sing, it's currently up 3.6%. For Mermaid Maritime, it's up 9.5%. For Alphabet, it's up 2%. For First Resources, it's up 2.6%. Next slide. For Bumi Tama Agri, it's up 3.1%. Seatrum, it hit our first take profit level at $2.27. So, and currently is up 9.1%. For sets, it's up 0.9%. SingPost is up 1.5%. Next slide. Next one, Yangzijiang Shipbuilding up 1.2%. And for Nebius Group, currently is down 4.7%. So that's all for the updates. I will hand over time to Paul for JP Morgan. Thanks.
Yeah, thanks, Zin. So of course, I don't cover JP Morgan. Glenn does, but I think he's on leave today. So let me just go through some of the key highlights. So JP Morgan released their second quarter results. I think the earnings, the underlying earnings, if you look at the very bottom on the table on the left, so sorry if it's a bit small, the earnings in the second quarter was up 2%. Because there was a one-off gain last quarter, so you will notice that the earnings actually came down on at least the headline numbers. The one thing different from JP Morgan's results compared to the rest, if you look at the second bullet point on the right, is the which is their net interest income, which grew compared to the other banks, which we will talk about later, Wells Fargo. So that was the one unique thing for JP Morgan. They grew because there's also loans growth. The other non-interest income, similar to all banks, I think you see it probably in Singapore banks, US banks too, is the capital market activity is benefiting all the banks. So for JP Morgan, if you look on the left, it's quite small even for me, but the principal transactions is actually equity and fixed income activity. So there's up asset management, investment activity. So all the capital market activities is helping the bank's non-interest income. Just one last one on terms of the positive. One thing that helped boost the earnings was actually provisions actually declined, which is unusual considering that the US is heading into tariffs and so forth, but they don't see any issues with their book, and actually they cut provisions. So hopefully the Singapore banks will also follow and not stuff so many provisions under the mattress. So in terms of the outlook, they did raise the guidance a bit, but we actually downgraded it to neutral, although at a higher target price. Do know that I think when we initiated this was about 200 plus. I think Glenn initiated this, I think last year, about $200 over $230, I think $230. So it's already risen 30%. So I think he's just a bit more cautious because of the macro activity, although he did raise his earnings. And the other reason is at the very last sentence at the bottom on your right is basically the valuation. So they've hit about 2.4 times compared to the historical average. So I think he's just a bit more cautious on the a bit more stretched valuation. So that's why he downgraded to neutral from accumulate. Next slide. So next one will be on Wells Fargo. So move on. So for Wells Fargo, again, similar to JP Morgan, the non-interest income grew. I guess the one other thing more unique for them is the card fees. So they make like 1 billion revenue on card fees alone. So that also did well. And similar to them, so the non-interest income grew. So similar to JP Morgan, I think everyone's benefiting from capital market activities like investment banking or investment advisory. Expenses was flat. The negative for them, unlike JP Morgan, is that they didn't manage to grow the loans as much. So that's why their net interest income didn't grow so high, it actually fell. The other thing is, unlike JP Morgan, I think the earnings at JP was better. So both also had profit growth of 12% in the second quarter, but I think probably half of the growth for Wells Fargo came from lower provisions. So they are provisioning, if you look at the second line on the left of the table, provisions came down about 19%. So we downgraded from buy to accumulate, although at a higher target price. So I think for Glenn, his preference is still Wells Fargo right now, because purely for valuation reasons. I just say he thinks JP Morgan's a bit more stretched. Okay, let's move on to the next slide. So we move on to our usual weekly. So last week, the prior week wasn't much, but this week there's a lot of macro news. But let me just run through some of the more important ones. So in terms of tourist arrivals into Singapore, it's still very weak. May is about basically flat at 0.3. Year to date is only up. First half is only up 2%. So the numbers from China actually fell again. It's very volatile, but so far this year, arrivals from China has been quite big. The second thing to watch, I think, since that small mid-cap stocks are doing so well, will be ready-mix concrete, the RMC volumes. So this will affect stocks like Pan United and also Hong Leong Asia. So actually volumes actually pretty weak. It's also flat, and year to date is only up 1%. So at least from my point of view, I don't cover, but it's a bit more cautious on the results because the volumes are not growing as strong as expected. But this will eventually come because the order books will always take the lead. And then once the orders are once the contracts are awarded, then you take time, you need to clear the land and so forth before you actually need concrete to build foundation and so forth. So all this will take time, but I'm sure their pipeline, their order books are full, but just that for this half it might be softer than expected. Singapore did well in terms of exports, 13%, but in the second quarter it was up 7%. So why this is important is that's why our GDP was better than expected. So for second quarter GDP, it was up 4%. Usually we don't talk much about GDP because don't make much difference. It doesn't mean the stock market will move, but this time around, it's more important is because Singapore, everyone is selling Singapore as the safe haven. Of course, the GDP helps, and there's also possibility, although not exactly clear now, but because in April, MAS actually reduced the appreciation of the Sing dollar, or at least the weighted Sing dollar. I mean, it's the trade weighted Sing dollar, or the NER. But with this better than expected GDP, we're not sure in the next meeting whether they might actually raise the rate of appreciation in terms of the Sing dollar. So we're not clear because MAS guidance for GDP is only 0.0 to 2%, but this year is already 4% for the first half. Although they did mention second half, they expect it to be slower, but it must be really much slower. I mean, otherwise you to go back this, it must be like almost contraction mode to go to a 0 or 2%. So that's why this GDP is a bit more important for the stock market. In terms of some of the China data, again, we don't cover China, but just to give you a sense of what's going on. The property market is still very weak. It's still down 8%. So this is residential space, so it's still contracting. For the first half, still contracting. Of course, it's contracting less than last year. Last year was contracting almost 20%. But what you feel now is the activity. So this is construction activity. So it's down 4%, or down 16%. So why this is important? Of course, construction activity will hurt China's GDP and will also hurt commodities. I know the demand for steel, no demand for cement, demand for iron ore, sorry, and also demand for coal, which is the coking coal that is used for production of steel. So all this has some impact, just for your info. The one fixed asset investments, which used to be growing maybe high teens, which was the main driver for China's economy, was also slowing down. So it grew about 3%, which is the weakest in, I don't know, more than 4 years. What's holding up China's economy now is still retail sales, which is actually still growing reasonably well compared to last year, only grew 2 to 3%. So it actually is accelerating in that sense for the Chinese consumer. For the US data, I think we all saw the CPI was running a bit hotter, a bit surprised that services inflation actually rising even before the goods. So retail sales is also doing well in Singapore. So retail sales is actually growing 4%. So the spending in the US is still very resilient. This is a very clean number because this is retail sales excluding motor vehicles, which is very lumpy and volatile. Excluding gasoline, because gasoline is also, because if oil price is down, then gasoline was small. So we try to make the cleanest number we can get. So this is actually still quite strong for US retail. Next slide. Okay, so in terms of our tactical views, so of course we've seen a huge rally in small mid-cap stocks. I think some stocks that we cover are actually doubled in almost 3 months. Yeah, or at least 30-40% in 1 month or so. So for us, I think we talked about the small mid-cap rally in not the recent strategy, but the strategy before that Frankenstein picture. But anyway, we still think this is just the first wave of the re-rating. So from very undervalued, I don't know, 5 times PE stock, 6 times PE stock to maybe now 10 times PE stock. So we think this is only the first wave. So the second wave we think will be the actual deployment of the money. So for those who, just to dial back, as most of you may know, there is MAS is going to deploy 5 billion into the Singapore market. May not be everything, but most of it. into the depending on the mandate. So this is the EQDP or equity, the equities development plan. Still on mind the Q, but that 5 billion. So we think the second phase will be the actual deployment of the money, which we think will be in phases. Most of this money won't be for the large index stocks, should be for, and also not for REITs. So we think this will be the second phase when the money is deployed. The third phase will depend on the results. So the areas where we think the results will be strong will be commodities like CNMC, geoenergy, and construction, of course, and building materials. Maybe steel will do well, but I think that one might be a bit weak because I'm just worried the first half may not be as strong because we just mentioned. But that will be another area of strong earnings growth, and of course property, because we've seen the humongous take-up rates of all the property, and especially like PropNex and so forth. Then the next wave, we are of course looking out for more small mid-cap stocks. So we will going to complete our construction universe probably the next few weeks. Then fill up all the gaps. Then we will move on to some of the small mid-cap services and infrastructure, which we think there'll be opportunity to. Just one last comment on small mid-cap is usually the last leg. I think those who buy small mid-cap stocks for the many years, the last leg is usually the penny stocks. Those 1-2 cent stock that rally. So until we see that, I don't think we are at the last leg. So usually when all the other stocks, the strong fundamentals rally, then people will just run to those with the best narratives, the most speculative narrative. So we haven't hit that stage yet. So I think that's why we think small mid-cap rally is still intact. Again, this is the usual. It doesn't mean it will follow that way, but this is what we think. Just one last comment. Not really a strategy, but just an observation that even the premiums have shrunk a lot. So in April to May, when we saw a lot of privatizations, most of the premiums was a huge 40 to 50% premium on just over the last 1 month VWAP or the last 1 month average share price, which is a huge premium because even with such a premium, the IFA also still considered the deal fair but not reasonable. And usually 1 month, probably some news probably leaked. So to still have a 40-50% premium is a huge. Right now the premiums have shrunk a bit. Again, this is just an observation. I'm not sure what to read out of it, but yeah. My final point will be just on the Fed. So we're beginning to see some of the Federal Reserve officials start to blink. Like Christopher Waller, he's more important because he's part of the FOMC voting committee. So he's also saying should actually cut rates because the labor market is on the edge. This is a less important Fed official because she's not on the FOMC, Mary Daly. She even said 2 cuts. But again, it's still split. The key guy after Powell, which is John Williams, I think he's the vice chairman. So for him, he says that got to wait until the effect of the tariffs on inflation, then only maybe they will look at cutting rates. Our base case is still rate cuts in the 4th quarter, or at least maybe September, October, November onwards. And anyway, regardless, our general view is that the equity markets now have both the Fed and the Trump put. So if there's actually any major selling, you could see the Fed start to react or even Trump start to react. I mean, just how we read the message. I think if the financial markets were to deteriorate, I'm pretty sure. Sorry, the internet is a bit soft. So these are the key events. You notice we put in Philip Morris and also Las Vegas Sands. So Philip Morris is because we think be a positive. Why we put Las Vegas Sands is because Genting Singapore. Although I think Las Vegas, yeah. So with the results coming up, we usually listen to the call just to get a sense of how Marina Bay Sands is doing, and then you can get a read of it through for Genting Singapore. This is Money Heroes, actually just stock, but actually most of the business is in Singapore. Those who may not know. Next slide. Yeah, because I had a bit more time, so half, this is just to show that arrivals won't be good. So the hospitality industry, at least the first half, may not be so strong because arrivals only up 2%. So this one is just on the export sector, which is actually still strong. So second quarter, there was actually up 7%. Next slide. Double the 3% in first quarter. This is the ready-mix concrete. So you notice the blue chart on the right. So you're just a bit concerned in the sorry, next slide. You're just a bit concerned that the volumes for ready-mix concrete is softening, like, at least year on year. It's slowing down. On the right is just the GDP. So the GDP is better than expected because of the red line, the manufacturing rose higher than expected. But MAS is expecting softness in second half. So maybe that's why they have this reduce the slope of the Sing dollar. But if that doesn't happen, then you should expect them to actually raise the rate of appreciation of the Sing dollar. Next slide. Okay, so this is okay, so this is the US sale, retail sales. So you notice retail sales, the blue line is still very strong. So retail sales in the US is still very healthy. This is on the right is because we all hear on the news of front loading, because of the tariffs. A lot of US consumer bought things ahead of the tariffs because they probably figure out that the prices will increase. But this is very evident for US auto sales. So you notice in March and April, auto sales did very well compared to the last 2 years. But then in May and June, it just collapsed because people just bought ahead. So I'm not sure what this is going to impact Tesla's results. But I mean, this is what happened. Everyone just buy ahead because they know no prices are going to rise. Next slide. This is just nothing much. So this is the CPI. I know on the one on the left is very hard to read. This is all the components of the US CPI. But you notice things are creeping up, so it's a bit concerning. But when we do a trend line, actually the core CPI in the US could actually hit 2.2% by December. Again, this is just mathematics. This is just trend lining the last three months. Next slide. Okay, so this is the Chinese economy. On the left is the amount of property sold, the blue line. So you can notice that the continuous contraction in property sales in China. So this is nothing new. But I think the other one is just the collapse in activity, which is going to hurt the GDP and demand for commodities and building materials. The one in red. So this is the space completed. It just totally collapsed. I think it's down like 16% year on year. On the right is just retail sales. So retail sales is actually improving from last year's 2%, now 5%. So that's a good sign for China. Next slide. Oh, okay, yeah. As you know, we always get a lot of questions on Wilmar. So we just do all the various indicators that we can get about how Wilmar should be performing. Since you get so many questions on this. So Wilmar has three parts of the business. The soy crushing on the left, and on the right is plantation and sugar. The third is Chinese consumer, which is edible. Also, the one we don't have a chart, but on the left is the hog price, basically pork price. So that is not doing particularly well. So that is the customer. So Wilmar will buy the soybean, crush it, and then sell the meal to hog farmers, which will feed the hogs. So this is going sideways, not doing particularly well. Likewise, the crush margins. So it's not like growing very well. So that part of the business may not perform well. Second part of the business will be sugar price and palm oil price. So that is recovering, but not a very stellar recovery. So these two parts may also be weak. So in general, based on these indicators, we think Wilmar results may not be that strong. But again, all this, let's take it with a pinch of salt because Wilmar does do a lot of timing of their futures contracts or forward purchases. So maybe they time it well and get better margins. But again, based on the indicators we have, it's not particularly strong. Next slide. I think this should be my last slide. Yeah. Oh yeah, okay. So this is my last slide since we had time to do more macro. So I just want to give an update on how offshore vessel charterers are doing. So these are your semi-subs and also the jackups. So the charterers are actually trending up, which is good for Seatrium too, but also good for Keppel because Keppel has a rig core which they want to sell. So if they can charter more and more of their rigs or even sell it, and then it will do well for them to sell this because this is a 4 billion exposure they have. We use this mainly to monitor rig core, which is what Keppel wants to sell. These container rates, this is container rates from China to US, China to Europe. So that's down almost 31 to almost 40%. So this is basically Yang Zhejiang shipbuilding customers. So it won't be good for Shangzhen Shipbuilding, obviously, when their customer charter rates are just down 40%. So again, this just to give everyone an update on some of the market data we have out there. Yeah. Okay, thanks everyone. I think there's no other question. Okay, yeah, thanks everyone. We can move on to Q&A. Yeah.
Okay. I'll take some questions. Some questions on the Centurion REIT IPO. With entity DC REIT already trading below water post IPO, will the same fate before Centurion REIT IPO? Perhaps better to wait till post IPO to join the party. Yeah, so I think for Centurion REIT, it's too early to say how well it will perform in terms of its share price because the prospectus is not out yet. So we are not sure how much the market cap and the kind of target price, IPO target price are they looking at. Yeah, but I think if we talk about the assets underlying the Centurion REIT itself, those are very quality assets, particularly the five Singapore worker accommodations, because currently the demand for worker accommodations is still growing. And as we know, the Singapore construction scene is still on an uptrend, especially with the spike in construction contracts awarded. Yeah, so we do think that the the assets underlying the Centurion REIT is very is kind of very quality assets, but with regards to valuations, we do have to keep a lookout for that. Yeah. Yeah. Also related question, Centurion REIT, another dividend value trap like NTT DC REIT. Yeah. As mentioned, I do think that the assets are quality assets in Centurion REIT. Another, I think just to add on a bit regarding the dividends, I think if you invest in Centurion now, it is kind of a you you can get quite a good exposure to the REIT itself because they are going to give out 5 to 10% in terms of the dividend in specie. Yeah, so we do think that you will gain about 6% yield in dividend in specie. So what that means is that you will actually get a hold of the physical shares of the Centurion REIT itself. Yeah, so if you invest in Centurion stock, the current parent group right now, you will have access to the Centurion REIT shares itself. Yeah. You see, there's a question on Lam Chang Creation IPO. Lam Chang Creation start trading today. Is it a good share to invest? Surprised this IPO share price is opening better than NTT IPO. Yeah, so I don't cover Lam Chang Creations and I don't cover NTT also. But I think just to comment on Lam Chang Creations underlying business, they are a construction company which focus more on the conservation side. So they will do refurbishment and also restoration of the very old buildings in Singapore. For example, the Chinatown shophouses, the National Museum, and so on and so forth. Yeah, so I think going forward, there are some upcoming projects. For example, Turf Club, they are going to do conservation projects over there. And also the many Chinatown shophouses, they do see that as future kind of business projects they will target, and as well as the old Singapore monuments, less than half of it is being conserved. So we do see the scene coming up, and I think they based on their track record as well as their financial performance, they have pretty good margins as compared to the other pure play construction companies. Yeah, so I do think that I'm quite positive on Lam Chang Creation, but I think just a caveat is that if you want to invest in the entire construction scene in Singapore itself, I don't think that Lam Chang Creation is a very suitable stock to play the construction scene in Singapore because it is a very small, very niche player within the construction space. There's other bigger construction stocks to invest in. For example, your building material stocks, BRC Asia, Pan United, with about 40 to 60 times I mean 40 to 60% market share in the entire building material for construction. Yeah. So yeah, so hopefully that helps a bit.
You meant the Lamchang IPO, the valuation is around 5 times, is it? What's the...
5 to 6 times forward PE. Yeah. FY 25 PE. Yeah. So and their FY ends ends in the middle of the year. So I think yeah, like what Paul said, based on PE wise, the valuations is also quite attractive. Yeah. Okay, I think there's some questions, some new questions. Semicon like UMS and Frankel moving up. Is this sustainable and where are the drivers from? Yeah, so semicon players, Singapore semicon players like UMS and Franklin, they are suppliers to huge equipment players, semicon equipment players. Some examples to name is, for example, Lam Research, Applied Material, and ASML. Yeah, so we cover Franken specifically, and we do think that Franken's growth is sustainable because I think in general the entire demand for high-end AI chips is still very strong. For example, the 2 nanometer chip, and because ASML supplies, I mean ASML produces the only equipment that is able to scale the 2 nanometer chip because of the high-end EUV technology that ASML has. So we do think that ASML has this kind of moat, and Franken is very well positioned because they produce a very key component in the high-end EUV machine itself for ASML. And because Franken is very well positioned in they have manufacturing facilities within Asia itself, and ASML is also expanding their operations to Asia. Yeah, so this is the kind of drivers that will drive the growth for Franken itself. Yeah. There's a question: is it better to buy Centurion instead of Centurion REIT? If you want me to do a direct comparison between the two, I think it's too early to say because we still don't know about the valuations for Centurion REIT itself. But I do think currently is a good point to buy. I mean it'll be a good play to buy Centurion because firstly based on the remaining assets of Centurion itself, they are also quality assets. There's still worker accommodations within Centurion, and because Centurion's balance sheet is very much strengthened because of this spin-off itself. Now, I think from about 500 million net debt, because of this spin-off itself, they have almost turned net cash already. Yeah, so I think Centurion, and also because they're also giving out the dividend in specie, so you also get exposure to Centurion REIT. Yeah. It's a question, Ben, your view on international cement since it's related to construction. Yeah, sorry, I don't cover international cement, so I don't really know. But to give some insights, yeah, I think as what Paul mentioned, based on industry-wise, the cement RMC volume is a bit lackluster in these few months. But that is because the works for Terminal 5 hasn't really started yet, because currently the project phase is doing the initial kind of construction project phase where they will clear the ground first before they pour in the cement. So for the second half of this year itself, we do see the cement ready-mix concrete volume going up. So that will drive the growth for Pan United and maybe international cement as well. Yeah, but I do need to have a closer look on this stock before commenting further. Yeah. Yeah. Regarding ASML, there's a question. Recently, they projected no growth for 2026. How will this affect semicon stock? Personally, I feel that they gave that kind of profit guidance. I mean, the growth guidance is because they I personally feel that it's because they want to manage expectations. It is not because they don't see demand for their technology itself. Because if you listen into TSMC's uh earnings earnings itself, TSMC mentioned that the capex their capex for 2026 wouldn't drop that much from 2025 itself. And 2025 is a big spike up from 2024. So this means that TSMC will sort of maintain the kind of capex, and their capex is being used to buy high-end equipment from companies like ASML. So we do think that ASML uh, will still benefit from the kind of demand for their high-end tech AI chip technology. Yeah. Okay, that's all from my end. Yeah, hand over to my other colleagues. Thanks.
Yeah, thanks, Iqbal. Yeah, hi, does low SOR SORA benefit USD denominated REITs like US office REITs, use core entity? Yeah, not so much. It really depends on whether they have a Sing dollar loan. So if they have Sing dollar loans, then of course they'll benefit from the lower SORA with especially if their floating portion is higher. Yeah, but most REITs also like US REITs or those with overseas assets, they will borrow in the currency that they are operating in for natural hedge purposes. So yeah, the low SORA doesn't really benefit like office REITs like the and digital core REIT and entity that much, but they do have some Sing dollar loans as well. Like for entity, for example, they have 20% of the loans in Sing dollar. Yeah, so for US, they follow more of the SOFR SO, the 3-month SOFR rather than 3-month SORA. Yeah. Yeah, what is NET REIT share price performance like last time when it's in the hot DC sector overpriced? What are the negative? Yeah, so if you missed it, I did a presentation on entity DC REIT last week regarding my view. So there are a few concerns. So one of it is the major tenant. So 30 over percent, like 32% is Tesla. So that tenant also it's although it's a long list of like 8 years, yeah, but there's a lot of kind of there's a lot of drama in the news, like anything regarding Tesla and anything like regarding Elon Musk and Donald Trump also, all this will affect the sentiment. Because after all, it's still 30 over percent exposure. So that is one of it. The next is the dividend yield, the headline dividend yield of 7.5%. So that is also, in our view, is a little bit kind of managed 7.5% because like first of all, they are paying 100% distributable income for then you get this 7.5% dividend yield, headline dividend yield based on the $1 IPO price. So most of the like Capital DC, for instance, they don't pay 100% of their distributor income. They retain some for capex reserve, like for any capex purposes. So they pay between like 90 to 100 to 90, 95% ish type of a payout ratio. So going forward, if that entity DC does set aside a little bit of capex reserve, so the dividend yield will also be lower, or rather the absolute dividend will be lower depending on the share price, of course, the dividend yield. So that's another factor. Another one is the management fees also. So most REITs currently they pay roughly, I mean it differs, but generally around 40 to 60% they pay in units, or rather they pay in cash. I mean, yeah. Then the rest of but for NTT rather, I mean, it's just they pay 40, like for instance, 40 to 60% in cash and the rest in units. So NTT, they're in their initial the prospectus, they'll pay 100% of their management fee in units. So when they do that, basically the first year dividend yield will be higher, but going forward, as more units get issued, the DPU will be diluted as more units get issued. So the first year will look good, but other than that, we will start in longer term, it will be more dilutive. So these are some of the headwinds that, or rather the factors that we see why NTT REIT performance has been quite lackluster, yeah, generally. So that is our view. Yeah. Since the over which are the top three REITs we should be looking for? Yeah. For us, we still favor those with a higher yield, like those like Stonemat REIT, for instance. That's one of it. Pays 9% yield, and Elite as well pays 9% yield. So those two we favor those. And we also favor those like for its resilience, like FCT, because of their stable portfolio, very, very resilient. The yield might be lower, around 5.5%, but we like it because of like its very stable portfolio, still generating like 7% rental positive rent reversions. Yeah, so these are the REITs that we still favor. Yeah, but definitely from the interest rate perspective, look out for those REITs that have a low percentage of fixed rate debt and have quite a bit of exposure in single loans. Like for instance, Far East Hospitality Trust, Suntec REIT, CDL, HT, all those REITs have low fixed rates. Percentage of loans that are fixed rates, and they do have single loans, so they will benefit from much lower interest rates. Now that the 3-month SORA is at 1.9%. Yeah, yep. I think that's it for now. I'll hand over to my colleagues. Thanks.
Yeah, thanks, Darren. Let me just try to try to answer some questions. Yeah, okay. So I just something wrong with my okay. 02425. I don't really know this company. I think it's Austria something. Yeah, sorry, I'm not very familiar with this company. I haven't heard of it for so long. So I think you're referring to Austrasia Group. So I'm not particularly sure about this company. So apologize. I don't have time to go dive deep into this company, so we can't comment on this. I think you're referring to Austrasia Group. Yeah. Yeah, so we don't give you the wrong answer. Yeah. Or anything misleading. All Singapore banks now at all-time high. Time to take profit or accumulate for more upside. Yeah, actually, I was looking at all the target prices by Glenn. I think most of it has actually exceeded his target price, except for OCBC. I think for now we just have to wait for the results. So if they pull back on the provisioning, my own thoughts, then I think you could see the market favor back UOB and OCBC. That's my to take profit, probably not. We think the first half results will be strong. Yeah. Because I think the capital markets will drive the earnings, and I think they might have to pull back a bit on their sorry, they have to pull back a bit on the provisioning, yeah, which they did a lot the prior quarter, because there's really nothing. Just to give you a sense, so like DBS, they made provisioning for the COVID, and they actually still have those COVID provisioning. I mean, of course, we all know COVID is over, right? So, but the big amount of provisioning they did it for COVID, I'm not sure it's as high as 2 billion, but that provisioning is still in their balance sheet. They never reversed back out. So, yeah. So I think they might probably slow down in terms of provisioning. So that could help take the share price one more round. Yeah, but the yield, I think right now is still probably 5 plus. Yeah. So that's why I don't really have give you a strong answer, but I think the second, we just have to wait. My guess is the first half results should still be strong. Yeah. Sorry, I'm just hesitating here because this one's a bit tough. It is more like a management decision on what they want to do with the provisioning. But we think the non-interest income would do well, and also there's loans growth in Singapore. Yeah. So I think the earnings should be stronger. What's the second half outlook for earnings? More upside likely to taper. which bank to accumulate. For us, if you are, I think in general, if you are more aggressive on the Singapore banks, it would be to buy OCBC and UOB, because the valuations are cheaper, and there is still upside in the dividends, because the dividends is pegged to earnings, whereas DBS dividends is confirmed. I mean, they already committed to it for every quarter, so the absolute amount is firm. Yeah. But for me, if you want to, for me, it could be DBS, because we are playing capital market activity. As you all may know, the second quarter, the volumes was exceptionally good. So was a very vibrant market. I mean, even now, of course, for Singapore. So that might actually help the DBS, especially because they are very strong in capital market activity. So yeah. So, Paul, your comment on shadow Fed chair, if it's easily happened to the market? I'm not sorry, I'm not really sure what does shadow Fed chair really means, but I think it is best for the market he don't remove the chairman. I mean, it's only a few more months. Just bear with it. Because if he does, if you make it too blatantly obvious that this the new chairman is going to support your policies, I think the market might react negatively at the bond market. So sorry, I wasn't really sure what you mean by shadow Fed chair, so can't really answer that. What are the drivers for Singapore banks to reach all-time high in the past week? I don't think there was anything. I think the whole Singapore market there's a big re-rating of Singapore market. I don't think there's any one particular news. Maybe one takeaway you can take out from the US banks, maybe the provisioning isn't so high. Sorry to keep repeating about this. So when the results come out, everyone will be eyeballing the provisioning. Yeah. Because we know there will be revenue growth for the banks, capital market activity and loans growth. Interest income margins may not collapse so much because the CASA has built up, but it's just provisioning, and really it's up to the banks. They always have a management overlay. Yeah, it's really it's I wouldn't say up to their mood, because don't sound so sophisticated, but it's really totally their decision how much provisioning they want to make. Like I said, even COVID provisioning is still there, so I mean, they don't make sense. Yeah. What is driving the recent price surge of Vicom Food? Okay, anyway, the whole Singapore market has undergone a big re-rating. So anything cheap, I think everyone's just buying stocks that used to trade, like, Valuetronics used to trade, half the market cap was in cash. Nobody believe it. Anyway, you keep calling to buy for so long. Then I think right now you're just getting to see the whole big re-rating. So even you take out the cash, it's probably like 10 times PE. So when the momentum come in, I think that's what's helping drive the momentum, and the momentum can continue, because we believe the MAS money is going to come out soon. And if they do it in stages, which is the most ideal, you come out 1 billion, 1 billion, 1 billion, then you create this positive momentum for the market. There's really no news that came out that say Food Empire, a lot more people go to the car and check for Viacom, or a lot of people go to Sheng Siong and buy more stuff, but actually they did. I mean, supermarket sales was very strong, but there wasn't any one fundamental news. It was just a big re-rating of the whole Singapore market, which we did talk about. Remember, if you attended our presentation, we had this Frankenstein monster there. Yeah, I mean, that was the reason. After I mean, Singapore market has been in slumber for, I don't know, 15, 17 years. So I think when you get this big re-rating, it was so undervalued. Yeah. Your views on any drivers for Yan Lot? So we are very positive on the developers. So, if you are going on the investment team of re-rating all the undervalued stocks in Singapore, so of course, the developers is one area. I know and of course everyone is frustrated with CDL. I mean, the share price. We all know the RNAV is like in, I don't know, $13 or even $15, $20, but we are a bit more confident that they know this. So for us, I think Darren may elaborate more. So our thesis is basically this: they actually wanted to monetize assets. As you all know, they had a REIT to monetize, they had buildings to monetize. But the problem was when COVID came, then of course all these China issues came up. They didn't really do it, and the headlines shows that instead of selling, they were buying assets. They recently sold an asset for 800 million. That slipped my mind. What's the name again? But
The South
so
Beach.
Yeah, South Beach. So we are actually pretty confident they know they need to monetize. They mentioned many times they need to de-gear. So you should expect them to monetize and do something like what Hong Kong Land did. And one thing about them is they are going to pay dividends based on profit after tax. They're not going to adjust it for one of us. So any of the gain on sales from South Beach, they will distribute it back to investors. And South Beach, they recognize at cost. So that's the second reason. We think dividends will be healthy. And the third reason, of course, this is our own theory. So don't like after 6 months, complain again. Why nothing happened. But we think the authorities might relax the rule on foreign ownership. So right now, ABSD, if you're a foreigner, is 60%. We think it is possible that the authorities, because it's only rational, 60% nobody's going to buy. So if they move it down to 50% to 40%, which is already very high, but limited to the expensive property, like anything 5 million, or I'm just picking a number, 4 million, 5 million, which is generally outside the range of Singaporeans. So I don't think that will be very detrimental. But because if you don't, a lot of CCR core projects that 30%, they usually any core central region project relies 30% on foreigners. And that there is no foreign demand for property right now, because 60%. So we think that could also lift sentiment for developers. So these are the three key catalysts, not to mention the hot property market that they can sell well and so forth. So that's why we are positive on CDL and we added it into our model portfolio. Yeah, although everyone complain, I mean, it's CDL, right? Yeah, we also complain about them, but we do see some re-rating catalyst for them. It's always cheap, no, but of course the key thing is re-rating. So we do see some re-rating. Yeah, sorry, I'm not a not a CDL spokesman, but anyway, this is our view. For Yan Lot, I think the recovery will happen, but it will be slow because they're mainly on Shanghai property, which is actually improving. So sorry, I don't really have much insights for Yan Lot, but that's our general view. Yeah. Because for Marco Polo, for Marco Polo, for those who don't know, they own CTVs. So those are the vessels that are in the Taiwan offshore marine. It's like a taxi, bring people between all those offshore wind farms that you see in Taiwan. So then they almost took bet their whole balance sheet on this new thing called the CSOV. For those who do not know, but this is like a big vessel which we visited, is to also transport, but with elevator, the highest spec, to bring personnel around for installation of all these big offshore wind farms. So one of them is already deployed, so you should get the revenue for the next 3 to 4 quarters. But that I think is already priced in. So the key thing for Marco Polo when they need to do the briefing is whether are they going for the second CSOV. So if they go for the second CSOV, then of course there's another big earnings jump. And because one CSOV, if I'm not mistaken, is about 80 million Sing, which if you dial back when they make the decision to buy this, it was like almost their whole market cap, not whole, almost entire market cap, all the balance sheet went into this one vessel, which has done well. I mean, because there's already charter, there's customers. So the key thing now is will they do the second, which apparently after doing the first one very successfully, this $80 million vessel, they are financiers for this, so it will be a bit easier for them. So that is what I'm looking for. Of course, right now all small mid cap stocks move up. So that's my own expectations. I mean, for what it's worth. Yeah. What do you think of most SGX increase recently? How would the trend be in next 2 quarters? Yeah. So because everything rally, everybody just buy across, whatever chip you buy. So I think the real test now would be just look at the results. So most of the stocks that we cover, to be direct about it, all beat our expectation. I mean some of the stocks are like 20-30% above our target price. And usually our target price has a like upside of 20 to at the minimum 20, some 30% return. Even that all exceeded the last 1-2 months. So we have to reassess and not get caught up. For us, I mean, we don't want to get caught up in just pure momentum. So we probably may downgrade some stocks if the valuations are too high. Because that's what we do. I mean, we're not chartists, right? So we look purely at the fundamentals. But having said that, we probably have to raise our valuations. We used to use historical valuations, But right now, we probably have to move up our historical valuations and not be naive about it, right? The whole market is re-rating these things to, I don't know, maybe in the past was 6-7 times PE, but the construction sector now could be like 10-12 times PE, so we can't be using 5-6 times. Yeah. So we might do this big re-rating of all our target price and follow the market because if the market is willing to pay for that. So yeah. So for us, that's to look at the results. But we think there is momentum because, like I said, there's money coming down, right, from the I can't say from the sky, but there is money coming down to buy all these small mid-cap stocks. So yeah, there should be more legs to this upside. Any update on the Great Eastern privatization? What will happen to shareholders who accepted? I think those who accepted the offer means you already sold to OCBC. I don't think there is you can claw back and take that. That's my understanding. So please don't hold me to it. But I did not follow Great Eastern very closely. But it's already you already took the OCBC already took your shares. Then I don't think they're going to give you back and then pay you higher. I think that's the situation, if you're not mistaken. Is it still safe to buy ST Engineering, Keppel, or Sembcorp? My own view is my preference among the three is still Keppel Corp. Because I think Keppel Corp has multiple catalysts. So Keppel Corp, number one, there's asset monetization, and there's quite clear, and the CEO is very very motivated. And of course, he wants to do all this asset monetization. So he's I wouldn't say passionate, but he wants to do it. So there's a rig call, like we mentioned, to sell the oil rigs, and if the charter rates are up, there's a upside to that. And of course, the M1 thing, I don't know. I hope no one gonna ask me again why hasn't it happened yet? Yeah. But anyway, this is the two big assets that he's going to monetize, so that should carry the share price, because once he does it, he will pay dividends. The second upside is, I think operationally, I think we mentioned before, it's going to be very strong for them. Not this quarter may not be, but the second half onwards, as they sell South Beach, number one, number two would be the submarine cable, and number three would be the new power plant that's coming on stream in the second half. So Keppel Corp for me, visibility of earnings growth and asset monetization is much stronger. So of the three that you mentioned, ST Engineering, Sembcorp, my most bullish on it will be Keppel Corp. Yeah. Again, not a spokesperson or there, but this is my own view. Okay. Okay. What's next for Great Eastern? If I'm not mistaken, my apologies, I didn't really follow closely, but I think they need to do a compliance placement to meet the 20% free float, if I'm not mistaken, because Catalyst is 15, so or 25. But I'm really not sure who's going to take up this placement, right? Because they make such the offer that they made was such a huge premium, so I'm not sure how you're going to get this free float now. Right. Paul, Alltech planning to have a secondary listing in Bursa. What is the impact over here? Yeah, okay. So there has been a few companies that announced Bursa's secondary listing. I think the notable ones is, of course, UMS, and now it's Alltech. So for me, I'm a bit more cautious on the types of company that go to Bursa. So for UMS, I think you cannot assume Malaysian investor or Malaysian fund manager are dumb, right? So they're not. If you bring UMS to Bursa, the fund manager is not going to say, well, thanks so much. My job is to help Singapore investors make money. Let me buy up the UMS share price so that all the Singaporeans can sell to me. So I don't think you should assume that, especially in Bursa when they have a lot of semiconductor stocks, unless you're very cheap. But I think UMS is already trading 20 over times. For Alltech, maybe it's a little different because Alltech is unique in that sense that there isn't such a company that is global, that is regional, and their peers also trading quite similar valuations. So Alltech may be a bit different, and fund managers might be willing to bite or maybe interested or maybe willing to bite in this stock because a fund manager not silly because they know this is fungible, right? So if I bring up this stock, I'm going to carry all the Singapore investors will dump on me. So you have to be very careful when selling in Bursa is not magic wand that the Malaysian fund manager, wow, I so want to buy Singapore stock. You bring it to Bursa, I will definitely carry the valuation. Okay, yeah, okay. Any thoughts on micromechanics? More upside? I think macro mechanics is also turning around, mainly because of the US, and with we have to wait and see for the next update. I don't have anything insights, but the macro mechanics has definitely changed a lot, because right now they are doing more front end. They're doing more wafer fab equipment, although they're not really describe what it is. But with a US plant, that makes them unique, because they have a US production, and yeah, they're one of the few that have a US production site. So that could turn into a jewel for them. But I don't have an answer for you, because I need to see how is the update on it. But in the meantime, for us, we still like Franken, because the valuations are cheap. I mean, like maybe right now it's 14 times, 15 times. Yeah. Yeah. So for us, our preference now is still Franken, like what Yigban mentioned, because I think that we highlighted before, Franken is different compared to a few years ago, because we think ASML is, they have a deeper relationship to ASML. So they are doing their latest products, and they are also taking care if ASML want to outsource more into Asia, which they never done so. So there's this additional two growth drivers, which the Franken of 3 years ago didn't have. Yeah, I mean, this is our own view. How many standard deviation now? Yeah, that's a good question. I think it's probably closer to the average. The average is about 14 times. So maybe now it's about 13 times. So it's coming close to the valuation. Yeah, sorry, I didn't go and update this. We usually do it only every month, and so apologize to the attendee. Yeah. But we think it's roughly 13 times, close to the average of 14 times. But like I said, if the whole Singapore market is going to get re-rated, don't let that historical 13, 14 times hold you back. So otherwise, you probably might have sold at our target prices, because we were using historical averages. But right now, everything's re-rated. Yeah. When will government disperse the money to boost SGX? We think it's soon. We think it's pretty soon. Because because they work very fast. So look out for the news that the MES might want to disperse the to fund managers. Sorry, MES will disperse it to a few fund managers. Then the fund managers will have to, because part of the mandate is to buy Singapore stocks. The non-index ones, then they will use the money to buy into Singapore. Is Propnex overvalued, although dividends still somewhat? Yeah, it's it's exceeded our target price of 133. We think look at the first half results. So at 133, the yield probably about 5%. Then they could still pay special dividend, and there's news of strong property. So there is momentum behind it. But we need to wait until the results. So before we do our updates. Yep. So always remember, analyst target price, we have to look at the results. So we don't follow like a chart, share price up, then we raise our target price. We have to carefully assess and look, and before we decide whether we want to raise it up or not. Yeah, but we think Propnex will be one of the ideal stocks if the MES money comes out, because it's easy to understand. They got like 60% market share. And the valuations can climb. I mean, this could be like another Sheng Siong. If you recall, Sheng Siong valuations used to be low teens to mid teens to now almost 20 times, because people see it as a very strong dividend yielding and strong market share stock. So I don't think it's overvalued, but of course, it definitely exceeded our target price. But there could be momentum with the first half results, upside in the dividends, and more news of property launches. So there's a few more launches to come up. So the huge take-up rate might carry the stock. But in terms of reviewing our target price, apologize that you have to wait until we see the results. Yeah. How will OCBC shareholders benefit from GE privatization? I really don't have the details. I don't have an answer for you. Sorry, this one I have to ask Glenn. I didn't look into it closely. Yeah. So sorry to this attendee. I don't have the answer. Maybe when Glenn comes in next week. Yeah. Yeah. Why is the whole Singapore market being re-rated? Yeah, it should have been re-rated long time ago. But anyway, re-rated because the valuations are cheap. There is a okay, there are a few things. Okay, so for Singapore, the yield has always been attractive. It's always been there. So you need money to come in. Then, of course, with news that the MAS want to bring in money, then that created a bit more momentum. And the Singapore stocks, if you look at all the government-linked or Temasek-linked companies, they have done well in returning capital to investors. If you look at Singtel, look at Capital, look at even Semco Industries, they have been raising dividends. They have been giving special share buyback, like DPS. So I think there's this big re-rating. It takes time now. People and right now, if investors are worried about global growth, they will probably favor Singapore because Singapore don't have technology. So you come to Singapore, it's not for technology. You come to Singapore for value and dividends. So I think this is one of it. It's easier to articulate the small mid-cap stock because there's a buyer coming and Singapore stocks were cheap. For the large cap ones, I think it's just a more tactical and also the strong Sing dollar. So a bit of currency situation. Yeah. But I think all this has been there. It's not like the last 1-2 months any corporate did anything differently. So I think it was something that's been building up for the last 1-2 years. The re-rating should have been done early, but I think just been done now. Yeah. But also do note now, Singapore market is up. It's all-time high after 17 years. So it's not like a very big re-rating. So yeah, I think we're only like you can ask Zain, I don't have the number, like we're only how many percent higher than our all-time high like 17 years ago. So if you know after 17 years, we are probably only up. I'm not sure Zain can give you the answer. I don't think even more than 10%. So it's not like we have a big re-rating too. Yeah. So got to take that into context after 17 years. Yeah. Yeah. Okay. Sorry, I have answered a lot. So let me hand over to the rest. Yeah. Thanks. There's a question about Alphabet. Yeah.
Yeah. So our question, there's a question about Alphabet. So for upcoming result, any comments on it, especially is investment in AI? Yeah, thank you. So thank you for the questions. I think the result will still focus on two core business segments. The first one is the digital ad. I think Alphabet will still see the keyword demand remain quite strong. So because and therefore they actually do see the pricing for keywords still remain high, even though they do see some of the China e-commerce retailer actually pull back the spending. But I think they will also see maybe demand from other region actually offset the impact. And then for the cloud business, I think they will have a stronger momentum because of better capabilities. And recently they also the OpenAI also officially listed them as a service provider. So I think the cloud business will still have a good good result. Like I say, it's because of the better capability, because of the easing supply condition. And then regarding to the AI spending, I do think that they will actually keep the capex on the same pace because the first one is moving forward. Alphabet really want to push on their ad targeting capabilities, and the second one is they do actually see a very strong cloud demand. So that they actually, it's just the lack of AI infrastructure right now in order to fulfill all the demand. So they will keep pushing on it. And then the third one is the competition from the ChatGPT, which is like AI powered search engine. They do have their own in-house, I mean, like AI powered search engine is called Gemini. I think they will still spend some money on it because they can actually utilize it because of Alphabet overall very large user base in order to compete with it, even though it's relatively small compared to ChatGPT right now. So this is why I think that they will keep the capex on the same pace moving forward. Yeah, I hope this answers the question. Thanks very much.
Yeah, let me try to wrap up some. I try my best to answer some because I'm really not sure. Hi Paul, will foreign stocks like Thai Bev get the benefit from small cap government fund boosting? REITs will not, right? Any others that will not benefit? Yeah, so the index stocks definitely not, those very large ones. The REITs also will not. But having said that, I think Thailand looks interesting, but I mean not to buy now, but I think not a good thing to say, but of course, if there are more bad news coming up, then there'll be time to start to position in Thailand because the politics is getting a bit more unsettled. So probably Thailand will be some place that to watch for. I mean, if the things get even more unsettled as usual, because if you get resolved, and, so I'm not sure how to answer this, but yeah. But no, foreign stocks, no, there is no allocation for small. So basically, how the mandate works, just to explain to everyone, at the very minimum, you have to put the 30% of what your assuming the MAS were to give you 1 billion. I'm just putting a number, it won't be so high, but let's say they give one fund manager 1 billion. At the very minimum, 300 million must go into Singapore stocks. Of course, this is the minimum, but of course, MAS will put more money into those fund managers that say they want to put more money into Singapore stocks. So you shouldn't assume only 1/3 will go Singapore stocks. The second thing is that the second thing is that it cannot be index stocks, and also the REITs thing, they didn't really explicitly mention no REITs, but they kind of hinted it, so because this was mentioned when they talked about the family office. And for me, if you think about the bigger picture, 5 billion, I mean, my own view, it's not a huge amount I mean, if this thing doesn't work, touch wood, who knows? I mean, they could always inject more, right? It's not like 5 billion is over. After 5 billion, I run out of money, I'm not going to put in any money. So for me, in a way, it's almost saying that it's a bit of underwriting here. That if 5 billion is not enough, maybe I throw in another 5 billion. But even before putting in the money, is really running. So that was my own view. Again, this is not the authorities' view, but yeah, since they can give like 270 billion, to GIC, I mean, so 5 billion, probably they can afford it. I mean, my own guess. Hi Paul, can you give an update on Yoma and Golden Agri? Okay, so for Yoma, as we discussed before, no, Yoma has been thrown everything. So Yoma is based in Myanmar. As you all know, Myanmar has a coup, electricity cut, earthquake, currency devalued, I don't know, 40-50%. So Yoma basically survived almost all of this. I mean, of course, there's also fighting in the country. So I'm not sure what other things to be thrown at them, but they've survived by selling property. So what I'm watching for is the elections. So if they're going to do any election, of course, by some standards, international standards, it may not meet those international standards, but so long as there is election, and China has already mentioned they want that election, if that happens, then maybe you could get FDI coming back into the country. Namely, countries like China might come in because Yoma is so resource rich. I mean, Myanmar is so resource rich, right? So that's what I'm watching for. If there is election, it could re-rate the whole sector again. But again, who knows? I mean, this is my own. Golden Agri, I don't really have much. But we are a bit more clearer on First Resources. We highlighted before was First Resources. They built a new biodiesel plant. So we at least know that there is an added growth for First Resources from the new biodiesel plant that they just built. Which they've already been given the allocation to produce and so forth. And biodiesel in Indonesia is a firm margin. The margin is confirmed because it's a pass-through. So I'm a bit more positive on First Resources because Golden Agri, I'm not too particularly sure the drivers. So I apologize if I can't answer that. Yeah, the Olam Agri, there's someone attendee that asked, can you comment on Olam sale of Agri Food Wealth correction, the sale of Olam Agri? I need to check on this. Again, some questions I couldn't answer today, so I need to double check on this. Because I don't have the latest update on that. So let me try to get it checked, and then if you do ask again next week, I'll try to answer for you. Or you can put it in our P3 chat here. Yeah, then we'll try to help you answer. Because sometimes I cannot touch base on so many things. Yeah. Thanks. I think I hand it over to Zain. Yeah.
Okay, thanks, Paul. I'll start on the TA questions. Okay, I see some question in the chat, so I'll just address it first. But if you have any question, just feel free to post in the Q&A instead. Yeah, so hi, first one for the ETHA, the iShares Ethereum Trust. I think you've seen quite a big rally for Ethereum recently. I think there should be some resistance for this close to $20.50 based on the 161.8% extension of Fibonacci extension, and this was a previous swing high level over here as well. So I would think there could be some short-term pullback, but overall momentum is still very strong where it could just retest the 5 MA level, this blue line over here. So that's around 24.80. Yeah, that might be a support. Yeah, the next resistance above that probably around $31. And for AT&T, I think probably some weakening recently because actually price was overall it's still uptrend, but I would expect some short-term weakness as price failed to carry on the momentum above $20.10, which was this recent level. Price did a break over here, but there's no follow through and there's a breakdown below this support line. So previously price was making higher lows on the way, and there was a breakdown over here. So we might see price just kind of sideways where the strong support probably around $26 and resistance for now I think it's 27.50 upwards. Yeah. Okay, then there's a question TA for Franken. Okay, Franken, I think it's just continue on the momentum right now. So breaking above 140 last Friday and also continue to sustain the high volume. So I think that's still very strong. If this continues, I think we could see try to trend closer to maybe 160 to 165 at the next resistance. I think somewhere around 165 might be a stronger resistance. Yeah, so for now, still just very strong momentum. Next one for is China Sunshine, China Aviation Oil and 579 Hong Kong. And so first up for China Sunshine, I think, yeah, so this one is still very strong as well. Currently retesting this trend line resistance over here. But if it can hold, I think there might be a possibility of it trending higher above that. Yeah, because price action is still very strong since the break of 5.57 cents and last week also after a consolidation over here where we tested the 5 MA at 61 cents, price continued to move higher. So definitely still very strong momentum in the short term where support is likely to come from the 5 MA around 63 cents now. Yeah, so I think over here it tested the trend resistance on Friday, but today is still holding up here. So if you can still hold end of the day, I think there could still be some upside, maybe towards like 70 cents things. Next one, China Aviation Oil also so still quite strong now. Yeah, still strong momentum of $1.06. There could be some resistance around 108 based on previous levels somewhere like here. Then the next one is around $1.12. So I think that could be the next levels to look at. And for 579 Beijing Clean Energy Company, this one I think there's some picking up in terms of momentum today. The price was only trading in this uptrend channel steadily, and overall it's an uptrend as well. So I think we could see some acceleration in terms of the price going higher with some increasing volume these 2 days as well. So in terms of the longer term chart, if it does retest this trend line resistance, we might see price maybe going to try to go towards 277, 280. Where 280 previously there was a level as well. Yeah, so I think it's still very strong. Okay, then next one for is Manulife USP. Manulife USP, I think it's looking better with holding the breakout of this 0.066 level of this range consolidation over here. So over here it looks like it's another range, but as long as price is still holding over here, I think we might see some upside towards retest 0.072 and 0.076 as the next levels. And next one is ComfortDelGro. I think it's a bit of a laggard. We can see everything is rallying, but let's see if you can try to break above 146, then we might see some upside towards maybe 148 as well as 153. It's a bit of a trading sideways still for now. Okay, then there's a question. For STI index, how high can it go based on your analysis or using FIBO. Okay, so yeah, take a look at STI. So STI, I think compared to the previous all-time high, I think 17 years ago, currently it's around 4,200. So previously it's around 3,000. Previous high back in 2007 was 3,900. So how much has it risen since then was around around mid 7%. Yeah, then for STI now, I think it's at a resistance area already. So in terms of my longer term chart, so this was plotted since the COVID lows. This is the channel it has been respecting. So previously over here back in 2021, 2022, when it hits these levels, we had some pullbacks. So over here we actually hit this level today, as of Friday and today. And also FIBO levels also at 261.8% extension. So it's very the rally is quite high, and the RSI is also at 88. So it's very high, and actually we haven't seen such a high RSI since many years, even during COVID times also. Previously we only hit 83. So I think for STI probably we will most probably see some pullback over here in the short term. Yeah, after such a strong rally. Yeah. Then afterwards, after the pullback, then we might continue to see the momentum continue. Yeah, next target level might be somewhere close to 4,320, I guess. Yeah, based on Fibonacci levels. Okay, then there's next one, some questions on sets. Yeah, for sets, I think it's recently it's trending better. So you see price was downtrend, and after that it did a range consolidation, price recovered above $3.03 over here, and once the breakout of 315, price is likely to hit higher. So yeah, I think sets will likely trend higher towards 340 next, this resistance. And next one is the key resistance around 356, where this was the previous neckline of a head and shoulders breakdown. Yeah, so these are the two near-term levels for sets. And for capital DCV, I think still a bit of a weakness in the short term. So it's just since price broke down this 227, 228 levels, it's doing a bit of retest. So we might see some sideways over here for a while first, unless you can try to break above 230 again, and we could see 235. So just a bit sideways in the short term. Then Zhejiang shipbuilding also looking better recently. So yeah, price looks like a breakout of inverse head and shoulders formation. Neckline is at 237, and also since the recovery from April, price has also we've seen higher highs, and also more importantly is the higher lows along the way while it was just consolidating. So with a breakout 237, I think we will likely to see price hit higher. Next resistance maybe somewhere around 257, which was this previous key horizontal level. And then next one is around 271. Yeah, so we probably see some could see some rally near term for Zhejiang shipbuilding. Next one, Lei Chun. Okay, Lei Chun also retested this trendline resistance over here at 0.078, but price also just holding over here, still quite strong. Yeah, so I think if you can still remain above 5 MA 0.077, there's a possibility that it could still try to trend higher. Next level might be 0.082. So I think still overall it's also an uptrend. So with a breakout of this ascending triangle recently, price is just seeing some momentum upwards there. As long as it can hold a 5 MA and this build up area over here, 0.076, 0.077, we might see price go up higher. Next question is on RH Petrol Gas. Okay, RH Petrol Gas, I think, after a consolidation over here, breakout of 18 cents, so we might see, then there's still some resistance over here, 18.4 cents. Yeah, so if price can break above 18.5 cents, we might see some bounce higher to maybe 19.1 cents, or to fill this gap over here around close to 20 cents. Yeah. For Joe Energy, I think see holding the breakout of this tower's resistance line, still finding some resistance at 35 cents, which was this breakdown level. So I think if price can continue to move sideways and hold this 34 cents, 33.5, 34 cents as a higher low, and you try to break out 35 cents again, we'll probably see some upside towards 37, 36 and a half, 37 cents next. Yeah, so I think overall, looking at the longer term wise, price did a pullback towards this previous resistance at 32 cents. So this is a key level held as support, and will, as long as can form a higher low here, we probably see price rebound higher afterwards. Next one, Pacific Radiance. Yeah, Pacific Radiance retesting this 0.044 level. So this was a prior strong support level over here. And tend to resistance retesting a few times. So I think overall, I guess some volume came in recently. So if it can hold, let's say, a higher low build up over here above 0.041, then if subsequently try to break above 0.045, I think we might see price try to trend higher towards 0.047 as well as 0.049. Yeah, so that's for Pacific Radiance. Try to see whether it can form a higher low build up over here and try to break out. Okay, then for the three Singapore banks, first one, DBS. Yeah, DBS, I think yeah, it's close to 40, today hit 47.77. Yeah, so yeah, still very strong trend after the breakout of this $45, 43 cents level. We might see some retest of the 5 but overall I think it's still strong. It's just trending along this level. So support might be around 46.70. Yeah, if that holds, then we might continue to see the momentum go upwards. For UOB, I think UOBs I think still haven't hit the previous highs. So this one is around 36.80. If here holds, I think we might see the continue rally towards around 37.70 to 37.90 area. And for OCBC hit around close to $17.30. Yeah, so over here we might see some slight pullback, retest around $70.10 area. Yeah, but overall, all three banks are still trending very well. So we might see some short-term pullbacks, but if it's well supported, we might continue to see them see the banks trend out, continue to trend out. It is on all tech. Yeah, so all tech actually, yeah, it's a new high. So I think still very strong momentum. See high volume price move out, high volume afterwards consolidating or low volume and back to rising or high volume again. So probably we might see it try to hit higher to make new highs. My guess probably we might see somewhere close to 80 cents soon. 80 to 81 cents areas. So just riding on the momentum for oil tech. Next one, CSE Global. I think the trend is still intact. So we've seen a gradual rally over here. Price took a pause, took a breather over here. By still holding the 10 MA level, the short-term moving average also broke above 62.5 cents recently. So if here, as long as price can hold over here, then I think we might see a continuation of the rally upwards. Towards next one, maybe around 70 cents as the next level. The next question is on CIFMAC. CIFMAC, I think, is also trending higher. So here, so it tends to do some range consolidation upwards breakout of it. So we might be seeing another range forming over here between like 91 cents to 94.5 cents. So I think still gradually trending upwards and holding along the moving averages. So probably we might see a continuation of this uptrend. if a breakout of it, we probably see a retest of this trend line again, resistance, maybe 98 cents to about $1 next as the next resistance area. Okay, then there's a question. Can you share TA on the China market slide, CSI 300? Yeah, so I think in general, my view is that the China Hong Kong markets probably will do some catch up to the US and Singapore markets, which are at the all-time high levels. Yeah, so just now I touched on the Hang Seng index. Hang Seng index Hang Seng index is also still trending well. So above this 24,600 level. So it's probably trending within this rising wedge itself. And yeah, overall it's in a bigger wedge, this blue color. Right? So I think it could still continue upwards. And for CSI 300, yeah, over here, CSI 300, I think is also trending well since the breakout of this downtrend, downwards channel over here in blue. And in terms of horizontal levels, also break above this 4,000 psychological level as well, as this is also a horizontal resistance recently. So I think most likely we will see the CSI 300 trend higher towards next key level close to 4,200. Next one, any thoughts on Tesla stock price movement? Yeah, so I think share the chart on Tesla. Yeah, so I think Tesla is for now probably we might see some strength in the share price because over here where price retested 318 over here, previous support and resistance, and another test over here last week, but price is well supported along the 5 ME as well as also break above this resistance. So I think we might see some try to test the next level somewhere around 333. Yeah, and I think overall it might be consolidating in this blue wedge over here. So next result outwards might be around somewhere 343. So near term wise, Tesla probably it might inch up higher slightly before the earnings. I think somewhere in the middle of this week. Okay, next one, there's a question on Meituan. Okay, Meituan generally is a downtrend over here, but recent price action a bit better when it recover above this 125 level. So I think now it's just to see whether it can try to hold this breakout or try to hold over this recovery. So we might see some pullback in the short term to test like 127 over here. Yeah, then you can hold, we might see price try to trend higher. Then resistance might be around somewhere like 139, that means from the weekly 20 MA. Next one, H2G. Yeah, so for H2G, I think it's a penny stock in SGX. For now, I think yeah, it could be trending a bit higher. So previously, this 0.008 is a bit of resistance and price, I think, trying to break out of it recently with a bit of a higher volume, more volume coming in. So we might see it try to test 0.01, 0.11. There could be some resistance over here where this was a prior support, consolidation for quite long. Yeah, so probably in reach over here, it might be just range bound. Yeah, that's my take on it. Is the iShare Ethereum ETF a good alternative to investing in Ethereum coin? I think it probably is a ETF tracking it, so I think that could be a good option. There's a question, China Everbright. For China Everbright, I think generally it's a bit range bound and the key resistance around 26 cents. But recently I think I would expect price to try to trend higher when previously was stuck below 23.5 cents range bound, and recently it's finding support above this price resistance. So probably we would see price try to trend towards 26 cents resistance again. Next one for UMS. Yeah, UMS I think it's currently there's a previous reason at 147. There might be some reason acting on it over here. Yeah, but generally it's still uptrend over here. So we might see some short-term pullbacks. If this holds as resistance, then support will probably be around 138 to 141 area, where it could retest the 10 MA level. Yeah, so maybe some sideways consolidation over here. Some Valuetronics. Yeah, Valuetronics, I think, yeah, starting to pick up recently where it's trending above this uptrend channel. The main uptrend channel it has been trading in since May of last year. And recently the price action also broke out this consolidation around 76 cents move higher. So probably we would see a price try to continue the momentum upwards. Then the next index resistance levels, a key one maybe somewhere around 84 cents, 86 cents area about there. Yeah. Then there's a question of being nanofilm. Okay, nanofilm, I think it's overall it's a downtrend, but recently just moving a bit higher and tends to do a bit of a consolidation and upwards. So I think could be trending within this channel over here. So short term wise a bit sideways between 63 cents to 68 cents around there. So if you can break out of this, I think we might see price trend a bit higher towards somewhere around 72 cents. Where previously this was also like a bit of a swing high resistance. Next one is Boston still moving up. Yeah, I think it's still a very strong trend over here. Since the break of 143, a strong bullish candlestick over here, and price is holding above 5 MA over here. So one break of 160, yeah, I think just probably continue to ride on the momentum for now. Yeah. Next one is YYY, which is the not sure what is this China. I think some ETF tracking China. So for this, I think it's yeah, just continue on a bit of a momentum upward since the breakout of this range consolidation in 165 to 170. Yeah, so probably we will see price gradually trend higher towards the swing high close to 180, 181. For CLR is the REIT ETF. Yeah, for the Phillip S REIT ETF. So I think this one probably looks good. So previously I had technical buy on this. It has been trading in a range. So between 76 cents to 81 cents around there. I will expect a breakout today. So the price action also quite good when price broke above this 79.5 cents around there and held as support. So probably we will see some momentum upwards for this SREIT ETF to go towards. The next levels will be probably around 83.5 cents to 85 cents area. Yeah, look at the SREIT index. I was looking at it just now. So today, I think today also breaking above the range, above 1031 again. So probably we will see some upside momentum for the S-REITs. in the near term. Next one is micromechanics. Micromechanics, I think a long-term trend is probably trading within this blue channel over here. So recently there's also some volume coming in, break of 170 as well as 176. I think near-term wise there might be still some near-term wise, and it could probably test 185 if it hits the channel again. So 190 is a previous horizontal resistance. So just after a spike, probably we might see some consolidation, and if it breaks above 182 again, then we might see it test 185 to 190 area. Next one, digital core REIT. Yeah, this one looking better recently when it held the 52 cents level over here. Also last week broke above 54 cents level. So probably we might see it move higher to test around 57, 58 cents area next as the next resistance. And okay, this question of Bing Kwang. Yeah, for Bing Kwang, I think we might see some continued upside for this. So I think it has been quite strong since start of this month, where we cover above the 20-cent level and price just it looks like a bull flag over here. So around 23 cents, price is holding the 5 and 10-day moving averages. When you see volume spikes, it's accompanied with price rises, and low volume is consolidation. So I think you can hold 23.5 cents over here. This is probably a downwards resistance line as well. Then if you can hold this level, I think I would expect some upside to test 26 cents as the next resistance. The next one for Takraw, I think nothing much happening right now. There's just the candlesticks are very tight over here, just moving sideways and not much volume also. So I think since it tested this $1.30 again, I would expect probably some resistance, maybe 144 over here. Where there could be a downwards resistance line over here. Yeah. So in the short term wise, I think probably still sideways consolidation. Unless you can try to break above this downwards resistance line, then maybe we could see some momentum coming to test maybe 150 again. Next one, Secura. This one's another penny stock. I think recently some volume came in. We tested 0.063. Yeah, very volatile in the short term. Not much volume, was around 100 plus K. So I think can swing either way as well. So maybe if I look at it, maybe some consolidation. Yeah, because after the volume spike, not much follow through. Yeah, price is just roughly between 0.060 to 0.067. So my guess maybe just sideways for a while. Next one is Golden Agri. Agri, not much happening still. Just still range bound between 23 cents to 26 cents area. Yeah. Then you can go above that, probably 28 cents is the next resistance. So overall, still very range bound since like 2022. Next one is T for LKH. I can't seem to find a counter bell. Maybe you can type in the Q&A again. Yeah, thanks. Next one, HST. I had a technical buy call today. So HST, I think it's looking positive with the breakout of this 86 cents level, which is this wedge consolidation, where it has been consolidating since middle of April, and also price has been holding 82 cents support multiple times. Yeah. So there's support coming in, and with the breakout, I think probably we would see some upside to try and test these previous levels. Okay, then I'll move talk about some of the Hong Kong counters. 9618 JD. JD I think is looking positive. So price has been holding the support multiple times, 123 around there, and looks like a break of a descending triangle today. So you can hold like 120, 128 around here. We'll expect some upside to test around 135.50. As well as around somewhere closer to 144, 146 here. 9988 is Alibaba. So for Alibaba, I think it's also doing better. So I think previously it touched 200 MA over here, close to 103. Then afterwards, you've seen a strong recovery above 108. And it looks like at the breakout of this downwards resistance line, 150, 116 level. So I will expect some, and today testing this swing high around 190. So I will expect some continued upside in the near term to test 122, this level over here, and fill the gap over here around 126. So these probably are the next two resistances. The next one by 2988. And this one looks a bit range bound, but positive thing is that there's higher lows being formed along the way here. Yeah, so it's just it's a bit more gradual, but still holding higher lows, so that's still positive. We might probably still see range consolidation near term between like $86 to $90 over here. Yeah, then if you can break out of that, subsequently the next levels will be somewhere closer to 95 and 99. Yeah. The next one is on JD Logistics 2618. 2618. I think it's just this one also just slowly trending higher. So it tends to form range consolidation before going upwards. So previously this was 1140 to 1260, then over here 1260 to about 1360, and break out of this reason. So I think probably we will expect price to trend higher. The next key reasons will be somewhere close to, I think, 1480 to 1550, this area over here. So I think price would most likely would continue to trend higher. And the next one is the CSOY Edge S3 ETF. Yeah, so I think this one is probably tracking the movements of the S3s as well. So today I think there's a dividend payout, so that's why it explains it's a bit of a gap down. But overall, I think should still continue to retest this 74 cents or this 72 cents level is holding as a support. So 74 cents, the next key resistance is around 76 cents to 77 cents afterwards. Asian ADV, let me see I have the chart for it. So I think quite a strong rally recently. Then we might see some resistance somewhere close to 0.098 to 0.100. Yeah. So maybe some consolidation might take place over here. And yeah, support might be somewhere 0.095 to 0.096. So maybe some consolidation first, then if you can break through again afterwards, then probably see a continuation of the momentum to maybe test somewhere like 0.103. Yeah. Yeah, I think there's still quite a lot of questions, but I'll just try to take one more as it's close to one. Manxiong, I think this is also a penny stock. Now, I think I can't really give a good answer on this. So because the volume is quite low, and when you see this kind of candlesticks, there's no trend going on. When you can just there's random price movement. So I can't really give an analysis on this. Yeah. But it looks like it's a downtrend, and short term wise, I think just moving sideways, like 0.020 to 0.030 area. So that's my best guess. Yeah, so I think there's still quite a lot of questions, but sorry, it's about one. Feel free to post the questions in the Poetry community chat. Yeah, then I can take it over there. Yeah, I'll hand over time back to Paul if you have to close the session. Thanks.
Zane, you can close it. Yeah.
Oh, okay. Yeah, so thanks everyone for attending today's session. And also thanks for all your questions. And feel free to join our Corporate Insights webinars. I think this week we have Money Hero. Yeah.
Yeah, and
So I think
yeah, and also I think some of you may have already. Oh, sorry to interrupt you, Zane. Some of you may have already seen the news. I think the EQDP has already deployed 1.1 billion to 3 fund managers. Yeah. For those who may not have seen it. Yeah. Thanks everyone.
yeah, thanks Paul. Yeah, so I think that's all for today, and we hope to see you on our next webinar. Yeah. Thanks, bye-bye.